Hello and welcome to Inside the Pod. It's a Pulse Market Update episode today, so we're going to be talking about how pulses are trading across the market and try and give you a bit of an understanding as to how world events and world markets are influencing supply and demand for pulses. Now, unlike world politics, the UK's pulse markets have continued to be quite quiet since the start of the year. The last of the human consumption bean export vessels from crop 2024 are now shipping and leaving our shores, and the overall export demand has been much lower since the last harvest. Now, while it would be great to sit here with a crystal ball and explain exactly what the impact of these emerging tariffs that are being imposed on major trading nations will have on UK pulse exports and imports, and indeed domestic supply for home-produced protein, the answer is that it's still far too early to say. For now, the market values are underpinned by soya and rapeseed meal in a market which is still really quite uncertain of the local pulse crop supplies. Now, international trading for the year to date is being described in our Pulse Market Update report as lacklustre, and that appears to be reflected in other EU bean exporting regions, and there's few offers coming from the usually more aggressive marketeers in the Baltic region. Now, this may either reflect a lack of export demand or a reluctance to offer against uncertain availability and mid-term domestic requirements. Meanwhile, the Australian crop arrives in the market. Initially slow to arrive, some UK beans found an early market for splitting, but quantities taken into northern Africa have been well below the expectations of a few years ago, and they've been displaced by the larger, more visually appealing and cheaper product from the southern hemisphere. EU export demand has also been relatively weak, and total exports from 2024 are perhaps as low as 100,000 tonnes. So, as the weather shows signs of improvement, UK spring drilling has begun, but only where the soil conditions permit. It is far from certain, following an open autumn and the confusion caused by SFI options, just how much spring cropping will be sown this year. The suggestion is that break crop areas, and spring crops in particular, could take a disproportionate hit when it comes to land being taken out of production in favour of the government's environmental payments. The trade remains very concerned as to what the impact may be, with many bracing against a potential further significant drop in pulse crop area. That said, there seems to be geographically widespread, if not intense, interest in pulse crop opportunities. So let's have a look at some of the crops in more detail, starting with feed beans. And as ever in these reports, we're reporting the price per tonne ex-farm. So feed beans trading has been steady but at relatively low volumes. Demand remains underpinned by the needs of the integrated feed companies, especially those in the poultry industry. Values have remained largely unchecked since October and are typically between £217 and £219 a tonne. There are variations for locations and delivery dates, of course. And the view is that beans are still generally overpriced compared to unit protein values in alternatives such as soya and rapeseed. Despite this though, the bean prices are holding up, suggesting either on-farm supplies do not exist or sellers are hoping for a late spring uplift in values, which the trade suggests may not arise. Buyback agreements for new crop exist, with modest premiums being offered over feed wheat futures. Premiums of up to £40 a tonne may be suggested to start the market, but at present there are few sellers. Export beans for human consumption, as hinted at already in this report, are largely over and done with. The last few bulk vessels are loaded and are leaving imminently, and with Ramadan having started on the 1st of March, even the smaller opportunities in containers are likely to slow significantly once April arrives. Few suitable samples are now being seen, with the colour deterioration being the main factor at this time of year, so the market is pretty much over for the old crop. Peas, there are various markets for peas and they're all very different to one another, so there's no general commentary offered in this particular edition. So the price indications I'm going to refer to now are for the produce offered in the free or open market. Starting with Marifats, the situations remain the same since harvest. Export trading remains under great pressure with alternative suppliers offering at very competitive prices. There remains effectively no immediate market for open market samples. with traders working their way through existing commitments with challenging ex-farm values. Contracting for marrowfat pea production for crop 25 has effectively stopped. Values ended in a range. We're hearing of between £400 and £450 a tonne. For green peas, the trading of crop 24 is now thought to be largely done. About 90% of the crop has moved on by our estimates. Demand still exists though for good quality samples, and prices of £350 a tonne might be offered if the product is still available to buy. In terms of crop going forward, contracts remain available and they're offered at various negotiated ex-farm bases. A typical minimum maximum guarantee might be between £325 and £425 a tonne, or alternatively on fixed prices with bonus options at values somewhere in between. Yellow peas, as previously mentioned in these reports, yellow peas seem to have travelled a roller coaster of boom and bust in terms of values. There appears to be no UK market at present. Very cheap imports from Eastern Europe are available, delivered at values below the UK feed market value and well below that at which sellers are prepared to sell ex-farm. The long-term story of significant demand for vegetable protein extraction, healthy starch and fibre for human consumption remains, but currently the UK commodity trade is oversupplied. Those considering contracts for the 2025 crop should contact their merchant directly. On to maple peas. These are in short supply and they're considered to be sold out from the 2024 crop. So if you have a shed full, you may have an excellent selling opportunity. New contracts for 2025 are available at around £425 a tonne. A slightly lower yield potential over green and yellow peas should be expected for maples, and contact your merchant if you are interested. The full report that I've just read out now is available on the PGRO website, and if you're a subscriber, you will get that in your email too. As we move on to the drilling season, hopefully as the weather improves, there are some crop establishment agronomy notes available from PGRO and some support there about how you get your crop off to the best start. The headlines are always to not be tempted to drill by the date, wait for the soil conditions to be right, and avoid compaction at all costs. For those spring sowing peas and beans, it's not too late, but those seeking to sow their own farm-safe seed should by now have had them tested. Do not use seed that tests positive for stem nematode. There's details of the PGRO's seed testing service on the website pgro.org/seed testing. There's also a frequently asked questions document on there, which is useful. So that's it for today's episode. Thank you for listening. If you want to stay on top of all of the PGRO's Inside the Pod episodes, you can hit the subscribe button and it'll download the episode straight into whichever service you're using on your phone or tablet. We'll see you again soon.